99% of the success of getting through tax season is organization. You ain't got to know all them laws. You just have to have all of your stuff together, whether you're filing as an individual, you got a business, whatever you got going on. I promise you, the more organized you are, the less painful this whole process is going to be for you. It is the most wonderful time of the year. It is not Christmas. It is tax season. Y'all, it is the happiest time of the year for me. I know my team always is like, what is wrong with you? You're always excited. You're always geeking out over tax season. I love tax season. Y'all, I'm a CPA. I'm a tax accountant who does not prepare their own tax return, though. Just a little fun fact. So listen, welcome back. I'm excited that you're here for another episode of the Thank Me Later show with me, your host, Jini Thornton, where we help you master your money and transform your life. So we're going to be brief, but we're going to be helpful today. So we're going to focus on a couple different things. We're going to focus on taxes from life events, marriage, having a baby, someone passes away. We're going to focus on a few life events, and then also just some of the basics to help you get through this tax season. I want to make sure that you're really, really good. All right. So, again, people stress out over tax season. And let me just say this. I'm going to say this at the beginning, middle, and end. 99% of the success of getting through tax season is organization. You ain't got to know all them laws. You just have to have all of your stuff together, whether you're filing as an individual, you got a business, whatever you got going on. I promise you, the more organized you are, the less painful this whole process is going to be for you. So I have questions that were submitted to me in advance. Thank y'all for submitting them. So that way I can answer exactly what you need to know and make sure you're straight and good this tax season. So let's jump right in. Question number 1, what advice do you have for people to help them get through tax season? Hey, again, stay organized. And so I know we're already into the new year. Right now it's early 2025. I'm not sure when you're going to watch this. When do you prepare for tax season next year? All year long. It's not like, oh, I'm going to wait. You need to be intentional about planning all year long. Then you'll get through tax season really easy. That's key number 1. Number 2, what are the most common mistakes you see people make when they owe taxes? Y'all be running and hiding. Y'all won't be opening them notices. Y'all act like y'all don't owe. The best thing to do when you owe the IRS is to please communicate with them. People are doing the opposite. Open every single notice. Very timely, because a lot of time your response has to be by a certain time. The other thing too is if you owe less than $50,000 and you're current on filing all your returns, you get an automatic payment plan for 5 years. It's going to take you 10 minutes to apply for that online. Okay. So again, please do not ignore them. Don't run, don't hide, and pay as much as you can. You definitely want to pay as much as you can because that interest is for real. Question number 3, how do you file an extension? So we know an extension is an automatic extension of time to file. You ain't got to do nothing fancy. Everybody, you can get an extension, but you need to ask for it. All right. So it's form 4868. You can go to irs.gov, and complete the form. If you're using like TurboTax or H&R Block or whatever tax software, that form should be available to you. I strongly suggest, though, like anything else, you want to file electronically. Don't be mailing them no forms. You know, that whole day of mailing forms, that's all over. Don't want y'all doing that. Okay. What are the consequences for filing a tax return? I'm sorry, filing a tax extension, not a tax return. Listen, a tax extension is an automatic time to file. You get more time to file, not to pay. So if you owe, your money is due on April 15th. And a lot of times people are like, Janai, that doesn't make any sense because I know I don't know how much I owe. The IRS is like, too bad, so sad. You need to have an idea of what you owe or pay as much as you can because the interest is going to start being calculated. Interest and potentially penalties is going to start back at April if you don't file your return to July, August, or whenever you do it. Okay. So again, an extension is an automatic time an automatic extension of time to file. It is not an extension of time to pay. So please don't think that. All right, this is the big one. So many of us are afraid of the I, the R, the S. What powers or rights do they really have when we owe them money? The IRS is the most powerful creditor in the United States of America. They have greater powers than any other organization, bank, credit card company. They are in front of all of them people. So that's why everybody's afraid of them. Now, what's interesting about them is they can be so easy to work with. People get in trouble because they're not communicating. They're not following up. They're not responding to the notices. They're running and they're hiding. It's the worst thing to do. You have got to communicate with them, all right? I need you to communicate very consistently with them. Do not run and hide. Okay, this is another good one. What percentage of people get audited, and what does the IRS look for to determine who they audit? Guess what, y'all? Less than 1% of people get audited. Less than 1. Now, that does not give you permission to be out here acting crazy, deducting stuff that you know is not real. That's how you're going to get audited. Not reporting all of your income. That's a top reason why you will get audited. The super high charitable contributions, definitely an area for the IRS to look at. The higher your income goes up, obviously, they're more interested in higher income, higher earners, higher income folks. But be careful, my philosophy has always been in business, not if, but when. So when I'm working with all my clients, particularly working in the entertainment industry, I'm preparing as if I know the IRS is coming. They're coming. So it's not if, but when. So we need to be ready. No matter when they show up, we have to be ready. So if you run your life and your business that way, then you don't have to be like, oh my God, I'm scared. Like if you stay ready, you don't have to get ready. A couple more questions. So if you owe taxes from a previous year, but you can't afford to pay, what do I do? Please still file your return on time. I see people who know they owe and they're like, ooh, I know I owe, so I don't want to get in the system. Now there's an additional penalty for that. It's called the failure to file penalty. You're going to pay extra just for filing later. File on time, even if you can't afford to pay it. Then again, pay as much as you can. Contact them and please set up that payment plan. You can go to irs.gov. 10 minutes, literally 10 minutes. If you owe less than $50,000, for y'all who owe more than $50,000, you might need to get some help. Because people are always like, I want to do that offer and compromise. That means you know how much you owe, right? But you want to say, I owe $100,000. I owe $200,000. I want to make you offer IRS of $50,000. You can do that, but there's a pretty extensive process because you have to turn in all your asset information, bank statements, mortgage statements, everything you own, they're going to know about because they're trying to figure out what you do own. So they do have the power. They do have the power to seize. They have the power to freeze your bank accounts. They have the power to take money out of your bank accounts. I have seen people's lives turn upside down when that has happened. So they can levy, they can lien, they can put a lien on your house or property, meaning that now you cannot sell it. So their power, again, is very extensive, but it doesn't have to get to that point. So please, again, don't ignore them. And then last question, what is tax return identity theft and how do you prevent it? Y'all, this is a real thing. Millions of fake tax returns get filed every year. So that means someone is using your name, your social security number, filing a tax return and getting a refund. Then you come behind and you file and the IRS is like, whoa. You've already filed. And you're like, what are you talking about? This happens to millions of taxpayers every year. Now, y'all know the IRS has a form for everything. There's a form. It's form 14039. So if this has happened to you, you definitely want to call the IRS right away. But you definitely want to file this form. Again, 14039. But you also want to make sure that you're contacting the credit bureaus too, Equifax, Experian, TransUnion. Because more than likely, guess what? If they have your information, they may be making some other moves too. So this is a huge problem. And they typically file very early. So by the time you come rolling around in March or April or May, them folk have filed, spent the money, and your whole situation has been turned upside down. So I hope that was helpful. That's just kind of I want to get you straight and ready for tax season. So let's talk about taxes through the lens of life events, because a lot of times we're not thinking about our lives, our financial lives in particular, through the lens of life events. So let's talk about a few things. Number one, what happens after you get married or divorced? So now, you were over here, right? They were over here. Y'all are filing two separate tax returns. Now you're married. You have a choice. You can file married filing joint, or you can file married filing separately. You do have the choice in order to do that. So which one should you do? It depends. It depends. Now, the tax rates are typically lower for people who file married filing joint. Now, but if you're married to somebody and you're like, wait a minute, I am not trying to be responsible for what they got going on from a tax perspective. Maybe you're like, that record keeping is a little shady over there. Or maybe that there's a significant debt that they owe. Because that's the thing. When you file joint, you are assuming responsibility for that debt too. If you don't want that, you absolutely want to file separately. Now, another thing people don't understand, say you get married in December. You got married December of 2024. You're considered married all year. So it doesn't matter when you get married, you're considered married for the entire tax year. So if you got married December of 2024, you can file a joint return if you choose to. The choice is yours. All right. So I hope that was helpful. All right. Having children. A lot of folk think, I have these kids and I'm going to get all these tax breaks. It depends. And the reason why I say it depends, the higher your income is, the IRS has something called a phase out. So they have all of these things you could take advantage of. The child tax credit, the child and dependent care credit. There's all these different credits. The higher your income goes, there's a phase out. That means you do not get to take advantage of as the same amount of the credit as people with lower income. So listen, don't be mad at me. I don't make the rules. I'm just telling y'all how it works. So there are several credits. So there's the child tax credit. It's $2,000. You have a child under the age of 17. There's the dependent care credit. It's to help parents who have kids. They got to go to after school program or daycare, whatever they got going on. That is $3,000 for one child and $6,000 for two or more children. But again, there will be a phase out the higher your income goes. Next life event. So we've covered two life events: getting married or divorced, having children. Next life event is someone passes away. A lot of people don't realize you have to file a final tax return for the person who passed away. If they had income coming in. So if they had a job and they had a W-2, maybe they were getting some sort of retirement benefits, veterans benefits, you have to file a final tax return. And a lot of times you don't think about that because, maybe your loved one passed away in the middle of the year. Tax season isn't until the next year. So it's really important that you're intentional and you have a way of keeping up with knowing that these statements are going to come in. You want to contact their employer to make sure the W-2 is going to come to you. But you're going to file a tax return, and there's literally a box that you're going to indicate that this is a final tax return. It's very important you do that. That's how you properly wrap up an estate for somebody. Okay? So, all right, buying a home. People also think buying a home, oh my God, I'm going to have all these tax breaks. It depends. Because you need to itemize. And itemize, that's Schedule A. And that means instead of just taking the standard deduction, now you can write off your mortgage interest. You can write off your property taxes. So depending upon how much that is, that could be to your benefit or not to your benefit. But that's typically what you're writing off. Mortgage, insurance, property taxes, not insurance. Now, if it's your rental property, yes, you can write off all that other stuff, but it's your mortgage, Mortgage interest. I think I said mortgage insurance. Mortgage interest and property taxes is deductible on Schedule A. All right. So last life events. This is career, business, kind of money stuff. So if you experience a life event and maybe you were on unemployment last year, honey, unemployment is taxable. I think that is so unfair, but it is. Again, I don't get to make the rules. So I don't care what state you're in. You received unemployment. You have got to report that income on your tax return. Very important that you do that. For all my entrepreneurs, whether you started a business, you have this ongoing business, it's very important that you're keeping track of the income that you have coming in, right? And then the expenses that you have that are related to the business. Y'all act like y'all can write everything off. You only can write off things that are ordinary and necessary for your business. So, for example, if I own a hair salon, what would be ordinary and necessary? Maybe I have booth rent. Maybe I've got shampoo. I'm buying hair. Any other of the equipment that I might need to do hair, right? I don't need to buy any construction equipment to do hair. That doesn't make any sense. What's ordinary and necessary for your business? Y'all be just trying to write everything off. And that's what the IRS is looking for. Like, what makes sense? If you don't have this thing, you cannot do your job. That's essentially what they're looking for. So listen, I don't want you to be stressed. I'm not expecting for you to be as happy as I am about tax season, but I do want you to be prepared. And again, a little organization will go a really, really long way. I strongly encourage you, if your situation is simple, meaning you just have W-2s, maybe you own your own house, got a couple kids, I strongly suggest that you consider filing your own tax return. It's just not that difficult. So if you're like, ooh, girl, I got too much going on, then just be intentional about finding somebody good. You don't want to pay a whole bunch of money. And then last, you have got to file electronically. When y'all mail them tax returns in, someone has to key in that information. That is crazy. And certainly some errors can happen that way. All right. So happy tax season to you. Please let us know if you have any other tax questions. Want to make sure that we are guiding you through this time of year. The happiest time of the year. So thank you for connecting with us. So please listen to our other episodes of the Thank Me Later show with me, your host, Jini Thornton. We have tons of amazing content. Please check out our community. Go to thankmelatermoney.com. And then for tax information, the IRS's website, I feel, is very user-friendly. That's irs.gov, G-O-V. And then if you want to do taxes yourself, tons of software out there. TurboTax. Look, they don't pay me a dime. Shout out. I like their software program, but there's tons of them out there. Okay. So again, thank you for tuning in with us to the Thank Me Later show with me, your host, Jini Thornton, where we help you master your money and transform your life. I'll see you next episode, everybody.